We continue the partnership accounts. Since we cannot close and transfer the profit to the capital accounts, there will be also some differences in the year-end procedures. So when we do the closing transfers, we'll work through it step by step. Most of it will be the same. It will come to the sharing of the profit that there will be differences. So the first closing transfer that we need to do is to close and transfer the debtors allowance to sales. Remember, debtors allowance in essence is a cancelled sale. We keep a separate record of it for internal control purposes, but at the end of the financial year, debtors allowance need to be closed and transferred to the sales account. We do that by crediting the debtors allowance account. For every credit, there needs to be a debit, and we will debit the sales account. At this point, the debtors allowance account will be 0, and the sales account will be decreased by the amount in the debtors allowance account. That is step number 1 of our closing transfers. Step number 2 now is to close and transfer sales. And we will close and transfer sales, the difference between the credit amount and the debit amount, by debiting sales with the 197,000 and by crediting the trading account. The trading account is one of our final accounts, and in the trading account we calculate the gross profit. And how do we calculate gross profit? Sales minus cost of sales. So in order to calculate the gross profit, we need sales in the trading account. Step number 3, we need the cost of sales in the trading account. So step number 3 is then to close and transfer the cost of sales to the trading account. We will credit the cost of sales because it is a debit and transfer it to the trading account by debiting the trading account. So in the trading account, we now have everything we need to calculate our gross profit, sales minus cost of sales. Please, very importantly, the trading account is used to calculate gross profit. Now, step number 4 is now to transfer the gross profit from the trading account to the profit and loss account. What do we use the profit and loss account for? To calculate the net profit. How do we calculate the net profit? It's the gross profit plus other income minus expenses. We use the trading account to calculate the gross profit, but it needs to be transferred to the profit and loss account because it becomes part of the calculation for our net profit. We will do that by debiting the trading account with the difference between the sales and the cost of sales. In this case, 97,000, and by crediting the profit and loss account. So we already have the first component in what we need to calculate our gross net profit with in our profit and loss account. Step number 5 is now to close all our income accounts to the profit and loss account. Now, incomes are credits. To close them, we will have to debit the income accounts and therefore credit the profit and loss account. Each one of them will be listed separately. For the example purpose, we will just have now one entry there. But if we have more than one other income, they will be listed separately on the credit side of the profit and loss account. Step number 6 is now to close off all our expense accounts, and since our expense are debits, we need to credit them, and we will debit the profit and loss account. Again, they will be listed separately, each expense separately here. So now we have all the aspects in our profit and loss account that we need to calculate the net profit. It's our gross profit plus our other income minus our expenses. Now, the profit belongs to the owner, and usually we have closed and transferred the profit to the capital account. But now we don't only have one owner, we have between 2 and 20, and they need to share this profit. So now we will have an additional final account that we call the appropriation account. We appropriate the profit to each partner according to the profit sharing ratio. The missing figure on the profit and loss account will either represent the net income or the net profit for the year. The profit or the loss of a partnership has to be shared between two or more partners. An appropriation account is created in the final account section in order to make possible the splitting of the net income or the net loss between the partners. So now we have three final accounts. The trading account that we use to calculate the gross profit. The profit and loss account that we use to calculate the net profit. And the appropriation account that we use to split the profit or the loss between the partners. Each final account has a specific purpose. You need to know these final accounts and what the purpose of each of these accounts are. Step number 7. If we have made a net profit that now needs to be shared, we will close and transfer that profit from the profit and loss account, debiting the profit and loss account, to the appropriation account. Therefore, my contra account in the profit and loss account is the appropriation account. So we debit the profit and loss, and we are going to credit the appropriation account. So now we have transferred the net profit to the appropriation account, where we will now use that profit and share it between the partners. So the profit, the net profit, will always be on the credit side of the appropriation account. Now, if we have made a loss, that means our expenses were more than our income, and our missing amount on the profit and loss account is on the credit side. So that means to transfer that, we need to credit the profit and loss account, and we will debit the appropriation account. In the same way that the partners will share the profit, they will also share the loss. But a loss will always be on the debit side of the appropriation account. This credit or debit amount in the appropriation account is then allocated to each partner according to the profit sharing ratio stipulated in the partnership agreement. So if we have partner A and a partner B and they share profits and losses equal, they mean you just have to divide it by 2 if you have 2 partners. And we have made a profit of 30,000. That means partner A will get 15 and partner B will get 15. They share it half-half. That now means we will debit the appropriation account with the current account A 15 and current account B 15. And each account will then be credited. So from the appropriation account, we will transfer the net profit, each share of the profit to each partner. So we will debit the appropriation account with current account A and current account B, and each current account will be credited with their share of the profit. So here in the example, we credit the current account A with 15,000. Please note the contra account is appropriation account, but we also will credit the current account B. When it's a net loss, it means the loss is on the debit side. That means to transfer the net loss, we will have to credit the appropriation account with current account A and current account B, 15,000 each, and each current account will be debited. So if there was a net profit, the current accounts will be credited. If there's a net loss, the current account will be debited. The last step is now to close and transfer the drawings of each partner to that partner's current account. So the drawings account of partner A will be closed by being credited, and the current account of partner A will be debited. And the same will apply to the current drawings account for partner B. So, to summarize, the final accounts in partnership is the trading account, where we calculate the gross profit. That is sales minus cost of sales, so that is what needs to be in the trading account. The profit and loss account is used to calculate the net profit. That is our gross profit plus other income minus expenses, so that is the accounts that need to be in the profit and loss account. And then the appropriation account we use to accommodate the splitting and the sharing of the profit. So let's look at an example. K King and K Kong entered into a partnership agreement trading as King Kong traders on the 1st of March 2001. King contributed capital of 400,000 and Kong of 200,000. So that means the capital account of King and the capital of Kong will each have a credit balance. King a balance of 400 and Kong a balance of 200. Remember, capital always have a credit balance. At the end of the first accounting period, the net profit was 120. So that means as part of the closing transfers, we will debit the profit and loss account with 120 and we will credit the appropriation account with 120. That is now to transfer the net profit to the appropriation account, where we will now do the splitting of the profit. The entry on the credit side of the appropriation account of 120 represents the net profit. In terms of the partnership agreement, they share profits and losses in a ratio 2:1. So that means in total there are 3 parts. The one partner will get 2 out of 3 and the other partner will get 1 out of 3. So the net profit of 120. The appropriation account is going to be debited with 120 and each partner's account will be credited. So current account King, that is the first partner, he will get 2 out of the 3. Okay, so it's 120,000 times 2 divided by 3. So we will credit the current account of King with 80,000. We will also credit the current account of Kong, but he only gets 1 part. So it's 120,000 times 1 divided by 3. And that equals 40,000. So that is to accommodate the transfer of the net profit to the different partners. So this is how it's going to look. We will debit the appropriation account with current account King 80,000 and we will credit the current account King with appropriation account 80,000. We will do the same with the current account of Kong. We debit the appropriation account with 40,000 and the current account of Kong will be credited with 40,000. Remember, final accounts do not have a balance. The difference between the debit and the credit side is transferred to another account, in this case to the current accounts of the partner. Now during the year, King has taken 36,000 as drawings and Kong 24,000. So what do we do with the drawings? They are closed and transferred to the current accounts. So that means the current account of each partner is going to be debited. Therefore, the drawings account of each partner is going to be credited. So current accounts is debited with the drawings and the drawings accounts are credited with the current account. And that is the drawings. So the drawings account of King had 36,000 in it. After the transfer, it will be 0. We will credit it with the 36 and we will debit the current account of King with 36. Which now means that the current account of King will have a balance of 44,000. So please note, the current account of King has a credit balance of 44 at the end of the accounting period. This represents the profit that was due to him that was not yet been drawn by him. King's share of the profit 80,000 less his drawings of 36. Kong, same applied. 16,000 is owed to him in respect of his undrawn profits. He has earned 40,000, of which he has already withdrawn 24,000, so 16,000 is still owed to him. From the business point of view, these amounts may be regarded as profits retained by the business, not paid out to the partners. In terms of the partnership agreement, only the capital balances must be maintained at the levels stipulated. The balances on the current accounts can be claimed by the partners at any time, provided there is sufficient cash available to pay them. If the amounts are large, there must be some mutual agreement between the partners before they can withdraw it. Or there will be specific stipulations concerning it in the partnership agreement. When preparing the balance sheet, the capital accounts and the current account balances will be shown under owner's equity. Owner's equity will now not just consist out of capital, but it will consist of capital and current accounts. In the event of a net loss, the journal entries will be the other way around. We will debit the appropriation account and credit the profit and loss account, and then we will debit the current accounts of the partners with their share of the loss, and we will credit the appropriation account. The entry for drawings will stay the same. It is possible for the current accounts to have a debit balance. That will happen when the drawings exceeds the share of the profit or if there was a net loss that was made.